Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Let's start, as usual, with a recap of yesterday, which basically went by a bit quietly, although with a positive tone, with markets that were generally leaning more towards the upside, but essentially still with very, very low volumes. And basically, as soon as we approach slightly higher levels, the price is promptly pushed back. From a macro perspective today, the focus is on the CPI, which will definitely be able to trigger some movement. We'll see what the numbers are and how they're interpreted by market participants. The data is scheduled about an hour before the markets open, so in Italy at 2:30 p.m. and I believe 8:30 a.m. in the United States. So pay close attention to this figure, as it's definitely a market mover. And then for commodities, as usual, we have the crude oil inventory report in the afternoon. So be careful, especially for those who follow these assets. I also want to remind you, as I posted in the chat yesterday, that this is an important week because of the 4th of July. There are futures expirations starting Friday. The September contracts become the front contracts for the SF, the Russell, and the Dow Jones, while the Nasdaq will roll over on Monday. Let's say that from an operational standpoint, we're seeing a bit of a disconnect between the main indices, and later I'll show you the Russell, which continues its regaining relative strength compared to the Nasdaq and ES, just as we more or less anticipated. We'll see if this movement will continue. In the same way, the American indices are starting to regain relative strength compared to the European ones. For example, looking at the SPX spread in the recent period, the ES has recovered about another 4% compared to the European DAX. So the situation is starting to take shape a bit, and we'll see now what further indications this data might provide us. From an operational point of view, let's take a detailed look, starting with the Nasdaq. Well, yesterday we had a double top around the 22.0 area, and last night there was another spike testing exactly this high, only to then fall back within the BC3 level range, which I currently consider the ones to watch. So on the upside, we're monitoring the red zero, which is around 22.10, and on the downside, we're watching 21,750. I'd say these are the key supports and resistances for today. Within these areas, you can safely trade the range using the intermediate levels. Let's move on to ES, which is in a pretty similar situation. Yesterday and again last night at 6,050, it made a nice spike, even breaking through, but basically everything was in the shadow. The high recorded yesterday, so here too we're going to monitor 6,050 on the upside, and on the downside 6,000 area, 595. In short, these are fairly easy levels to identify. It's all pretty clear, there's nothing else to add. So as you can see, the movement is tending a bit upwards, even though I repeat, what's missing right now are the volumes, and so this always keeps warning bell ringing for me, because it's a bit like a giant with the feet of clay. In short, if there aren't volumes at the base to support the movement, in my opinion, it would take very little to bring it down. So as I always say, maximum caution, let's navigate by sight during this period and take what the market gives us, because this is what the market is offering right now. Let's move on to the other two American futures, starting with the Dow Jones share. The situation is even clearer in short, an absolutely obvious and straightforward trading range, 42.7, 43,000 basically. there's really not much else to add. Let's keep monitoring these levels. Here we also have a dividing level, which is 42,820, marked at this BC3 level, so it's absolutely perfect a trading range that we need to keep working within until a direction is taken, one way or the other. So let's keep working the range areas as we know how. Let's move on to the Russell, which, as I was saying, is recovering a bit more. In fact, yesterday had a nice spike reaching 2,170, and in my opinion, it's the strongest of the American equity futures. I believe that if the market trend continues like this, it should outperform the others, as has already happened since June 5th. If you calculate the spread between, for example, the Russell and the Nasdaq, you'll see how the Russell has regained quite a few points in relative strength since June 5th, so since last week. On the upside here, let's keep an eye on 2,170. On the downside, I would monitor this level here, 2,150. If this holds, it could definitely lead to an immediate attempt at the highs, while a break below would likely bring prices down to test this whole area around 2,140 and even 2,130. Let's move on to commodities. Here we go. Let's start with oil. Yesterday it made a nice upward surge, basically reaching the areas we had pointed out, which were around 67, I believe. More or less, it managed to hit 66.30, 66.40, but the movement did happen in the direction we were expecting. But then, well, it pulled back. It went back to test 64.50 last night, actually yesterday evening. It found strength for a rebound, but this last surge happened with the volume, so we'll see if here we can manage to recover, break off 65.15, 65.30, which then represents the BC3 level area, so a recovery of the BC3 levels. In my opinion, within this range here, it could easily bring prices back to retest the area of the highs recorded yesterday. On the downside, of course, we're monitoring 64.50, 64.60, which seem to me to be the main support, and which also happens to be in today's ST Dawn area. Let's take a look at gold, which is obviously a bit stronger. It recovered yesterday, basically at the opening of the US markets, reaching 3,370, breaking out of that range we had indicated in yesterday morning's daily analysis, only to almost immediately fall back into it. However, it didn't go down to the lower part. You can see we can always define it with the BC3 levels, which in this case act as a dividing line with the BC3 range from Tuesday at the opening of the regular trading hours. Right now, this is the level to monitor at the 3,340 area. It made a spike to 3,335, testing as the zero with almost pinpoint accuracy, and then recovered throughout the night. At the moment, it's trading around 3,360, so above these highs, resting on these highs, and frankly, I expect probably another attempt at this high area, and if it breaks through, prices could even go hunting for 3,400, so into today's high area and today's value area. On the downside, of course, we are monitoring 3,340 and 3,330 because a break there could lead to a test of 3,315 first, and then 3,288 previous support level that we've pointed out several times in recent weeks, which is very, very important. The situation is basically mirrored for SPX compared to ES, also because we're right up against the contract expiration, so the point difference is really narrowed down and the movements are very, very similar. For my segment, there's about a 6 or 7 point difference today, so it seems almost pointless to talk about it. They're basically the same. Even though yesterday, as you can see, it didn't manage to update the high that was recorded at 9 o'clock, then it went back to retest it and remains a bit anchored, in my opinion. 6,040, 6,050 is the area to break through exactly as it is for ES. On the downside, we're watching for a move back below 6,020 because, in my view, dropping back below 6,020 could bring prices back to retest 599. On the upside, we are obviously monitoring this area here, and we still have to keep an eye on Bitcoin, which yesterday managed to hold on to that nice recovery we pointed out. This is the pivot we've shown and highlighted several times. It made this high, then pull back. Basically, it formed a double top in this area here, which is a bit risky. So let's monitor the pivot area at 108.370, 108.380. A break of this level could project the double top area, which starts from 110.5, so about 2000 below. If it breaks 108, we could end up in the 106.4 area. So this could be the target area for this double top that has formed well, a relative double top, of course, and breaking this pattern could bring prices down here. Obviously, it could also just be a simple market pause with a new test and a breakout to the upside. So let's monitor 110.5 on the upside and 108.350 on the downside, because I think this is a nice pattern that could signal a temporary reversal, but it could bring prices back to this area here. Perfect. With that, we've reached the end of this daily analysis. As always, exercise maximum caution, especially as we approach the release of those important data points we mentioned earlier. As usual, leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thanks everyone for your attention.